2026 is approaching fast, and most investors are asking the wrong question. They're wondering which stock will explode next, which chart looks exciting, which rumor might turn into a miracle. But Charlie Munger taught us something far more powerful. Long-term wealth doesn't come from guessing the future. It comes from choosing the right kind of businesses and holding them with patience. Today, we're not chasing predictions. We're using Munger's timeless thinking to identify 3 types of stocks that make sense to hold through 2026 and far beyond. If you understand these categories, your portfolio becomes calmer, clearer, and built for the long run. Welcome to Invest in Wisdom, the place where investing meets clarity, discipline, and mental models that stand the test of time. If you enjoy growing your wealth with ideas, not hype, make sure to subscribe, like, and share. Now let's begin. Pillar 1, Dividend Aristocrats, the quiet cash machines that never stop paying you. When people talk about investing, they often talk about the next big thing, the next breakthrough, the next rocket ship stock that might double or triple in a year. But Charlie Munger always saw the world differently. He believed that the most powerful force in finance wasn't excitement, it was consistency. And few things demonstrate consistency better than the Dividend Aristocrats. These are companies that have increased their dividends every single year for at least 25 years. Think about that for a moment. 25 years is long enough for the world to go through multiple recessions, tech bubbles, oil shocks, housing crashes, pandemics, political turbulence, and unpredictable chaos that can erase fortunes overnight. Yet, through all of that, these companies never stopped paying. In fact, they paid more every year. Just imagine the discipline, the stability, and the resilience required to do that. Dividend Aristocrats are not lucky. They are engineered for survival. They are built on boring businesses. But boring is often just another word for essential. People buy their products in good times and in bad. Their cash flow doesn't depend on hype. It depends on habits, necessities, and reliability. And here's the secret Munger understood deeply. When a business produces steady, unstoppable cash flow, it becomes incredibly hard to kill. Revenue might slow during a crisis, but the demand never disappears. And because these companies are run by conservative, disciplined leaders, they prioritize dividends the same way families prioritize food and shelter. First things first. Now, why does this matter for you, the long-term investor? Because dividends change the psychology of investing. When your portfolio sends you cash again and again, you don't panic during market downturns. You're not forced to sell shares just to survive volatility. Instead, you become the calm one. You become the person who keeps collecting income while everyone else is refreshing their screens in fear. Dividends also provide something priceless: proof. Proof that the business is healthy. Proof that cash is real. Proof that management is committed to sharing profits with the owners, with you. And over time, reinvested dividends quietly become a second engine of compounding. No drama, no noise. Just silent growth accumulating in the background while you go on with your life. Dividend Aristocrats won't make headlines. They won't double overnight. But they will do something far more powerful. They will keep showing up. They will keep paying you. And they will keep reminding you that wealth is not built by predicting the future, but by owning businesses that survive the future. In a world obsessed with speed, dividend aristocrats are the reward for those who understand patience. Because real wealth is slow, real wealth is steady, and real wealth whispers through checks that arrive like clockwork, even when the rest of the world feels uncertain. Pillar 2. Index funds. The simple tool that beats 95% of professionals, even when you're not trying. When people first hear about index funds, they often think they sound too simple. How can something this basic outperform the smartest people on Wall Street? But that's exactly the point. Index funds don't try to be clever. They don't try to predict the future. They simply own the entire market and let the global economy do the heavy lifting. Charlie Munger loved simplicity. He believed that most investors don't fail because of a lack of intelligence. They fail because they can't stay consistent. They trade too often. They react too emotionally. They chase stories instead of systems. And that's where index funds quietly shine. An index fund doesn't care about headlines. It doesn't panic when markets fall. It doesn't get too excited when markets rise. It follows one rule: own great companies at low cost, forever. And here's the shocking truth. Year after year, index funds outperform the majority of professional fund managers. Not because index funds are brilliant, but because humans are flawed. Professionals pay high fees. They trade too much. They try to outsmart each other. They guess who will win next. Meanwhile, index funds sit still, compounding quietly, letting math and time do the work. This is why Warren Buffett famously advised most people to put 90% of their money in a low-cost S&P 500 index fund. Not because people are dumb, but because people are busy. Life is already stressful enough. You don't need your portfolio to add more chaos. Index funds give you something rare: peace of mind. You don't have to study charts every day. You don't have to pick the next winner. You don't have to become a genius to grow your wealth. All you have to do is stay invested and let the world's greatest companies, Apple, Microsoft, Amazon, Google, Costco, Visa, and hundreds more, work on your behalf. And here's the underrated part. Index funds don't just help you grow your money. They protect you from your own worst impulses. They keep you from panic selling at the bottom. They keep you from chasing hype at the top. They keep you steady so your wealth can grow in silence. There's a quiet elegance to this strategy. Nothing flashy, nothing dramatic. Just the slow, steady heartbeat of global progress, turning into long-term compounding. In a world overflowing with noise, index funds offer clarity. In a world obsessed with prediction, they offer inevitability. And in a world where everyone wants to look smart, index funds simply are smart. Not because they know more, but because they need less. Simplicity is not weakness. In investing, simplicity is a superpower. And index funds are the clearest example of how ordinary people can build extraordinary wealth by simply getting out of their own way. Pillar 3. Cash reserves. The most overlooked asset, the one that gives you God mode vision during a crash. When people think about building wealth, they often ignore the simplest tool of all, cash. Not cash as in, I'm scared of investing, but cash as a strategic reserve, your quiet shield against uncertainty. Charlie Munger understood something most investors miss. The biggest opportunities in the market never come when things are calm. They come when everything's falling apart, when fear is everywhere, when screens are red, when good companies are trading at prices that only appear once a decade. And in moments like those, there is only one kind of investor who has an advantage: the one who has cash. Cash is not exciting. It does not grow by itself. It does not make headlines. But during a crisis, cash becomes a superpower. It gives you clarity when others are blind. It gives you confidence when others are panicking. It gives you choice when others have none. Most people underestimate this. They think the goal is to be 100% invested at all times. But here's the truth. If you are fully invested, you are also fully vulnerable. Markets move in cycles. Crashes will happen. Corrections will happen. Fear will return again and again. But with cash reserves, you don't just survive downturns. You capitalize on them. Cash turns chaos into opportunity. Cash turns panic into discipline. Cash turns uncertainty into freedom. Think about the investors who bought Apple in 2009, Amazon in 2001, Nvidia in 2012, or entire market indexes during the COVID crash. Those weren't moments of courage alone. They were moments of preparation. You can't buy bargains without cash. This is why Munger always said, "Opportunities come to the prepared mind." And part of being prepared is having dry powder ready, patient, quiet, waiting. Cash reserves also serve a deeper purpose. They protect your psychology. When you know you have a buffer, market volatility stops feeling like a threat. It becomes background noise. You sleep better. You think longer. You're not forced to sell good assets at the worst time. Cash gives you emotional independence, which may be the most valuable form of wealth. In a world that rewards being aggressive, holding cash is an act of wisdom. It is the calm before the opportunity. It is the pause that makes the next move powerful. It is the difference between reacting and winning. So the third pillar of long-term investing isn't about chasing returns. It's about protecting your future self. Cash is your parachute, your armor, your leverage when the world forgets how to stand still, and when the next storm comes, because it will, the person with cash will not be afraid. They will be ready. Pillar 4, the Munger Way. Don't chase markets. Chase discipline, cash flow, and inner calm. If the first 3 pillars give you structure, then this 4th pillar gives you stability. Because Charlie Munger believed that wealth isn't built from knowledge alone, it's built from temperament, from the kind of person you become when markets rise, when markets fall, and when the world tries to shake your confidence. Most investors spend their lives trying to outsmart the market. They jump from stock to stock, trend to trend, idea to idea, hoping that this time, finally, they'll catch the perfect moment. But Munger saw that as a trap, a distraction, a guaranteed way to lose money and peace. He would say, "You don't need to be brilliant, you just need to avoid being stupid." And chasing markets is the fastest path to stupidity. So instead of chasing prices, he chased 3 qualities: discipline, cash flow, and inner calm. Discipline is the foundation. It means building a system you can actually follow, staying inside your circle of competence, focusing on great businesses you understand, ignoring noise that has nothing to do with your long-term goals. Discipline is what keeps you from buying high, panicking low, and letting your emotions run your portfolio for you. Cash flow is your anchor. It gives you stability when chaos hits. When you own assets that pay you, steady dividends, quiet growth from index funds, income from long-term compounding, you stop viewing the market as an enemy. Cash flow gives you breathing room, emotional oxygen, and the confidence to stay invested when others are losing their minds. But it is the third quality, inner calm, that Munger valued most. Inner calm doesn't mean you ignore reality. It means you respond to reality with clarity, not fear. It means you can watch your screen turn red without letting your heart rate do the same. It means you can see opportunities in chaos instead of seeing danger everywhere. A calm investor waits for the right pitch. A calm investor buys only when the price makes sense, and a calm investor holds for years, sometimes decades, while compounding does the heavy lifting. This is why Munger often appeared unemotional, even during crises. He wasn't stone cold. He was prepared. He knew that long-term wealth never belongs to the loudest person in the room, or the most confident, or even the most educated. It belongs to the person who can remain steady, while everyone else is reacting to noise. The Munger Way is simple, but not easy. It requires patience in a world that values speed. It requires restraint in a world that loves excitement. It requires calm in a world built on fear. But if you master these three qualities, discipline, cash flow, and inner calm, you don't need to chase markets at all, because over long periods, the market eventually rewards the investor who can stay sane while others cannot. And that, ultimately, is the true edge that Munger wanted every investor to build. Pillar 5. The real lesson. 2026 doesn't matter. Your system does. Build a structure that protects you for the next decade, not the next cycle. As we look toward 2026, it's tempting to ask all the wrong questions. What will the market do? Will the economy rise or fall? Is a recession coming? People search for predictions because predictions feel comforting. But Charlie Munger knew something deeper. The future is never predictable, but your system can always be dependable. The truth is simple. You don't need to know what 2026 will bring. You only need to build a structure that can survive 2026 and every year after that. That's what the three pillars are really about. Dividend aristocrats protect you with cash flow, even when the world feels unstable. Index funds tie your future to global progress, letting the world's best companies grow your wealth quietly. Cash reserves give you power during fear, vision during chaos, and confidence during storms. Put them together, and you no longer live at the mercy of the market. You live according to a system that reduces stress, creates stability, and builds the kind of wealth that compounds quietly over decades. And that's the part Munger wanted every investor to understand. Cycles don't build wealth. Systems do. You don't win by guessing what happens next year. You win by preparing for the next 10. You win by making decisions that still feel right 20 years later. You win by choosing patience over prediction, discipline over chaos, and long-term structure over short-term excitement. Because what happens in 2026 will come and go, but a strong system, a calm mind, steady cash flow, consistent investing, and money set aside for opportunity, that is what protects you for a lifetime. So as we close this episode, remember this. You are not building for the next cycle. You are building for the next decade. You are building a foundation that supports your future self, your future family, your future peace. And if these ideas help you, if this way of thinking gives you clarity or calm or a sense of direction in a noisy world, then I'd love for you to stay on this journey with me. subscribe to the channel, share this with someone who needs long-term wisdom, and together, let's build a life and a system that grows stronger every single year.